Well, as promised, we have the management of Shriram Finance now joining us. Shriram Finance is the number one volume-led gainer on the NSE right now. So it's a big name, second largest NBFC, and it continues to perform very, very well. So there you go on your screen, 5% on it, 6 million shares. So it's a big number out there, both on price gains and volumes as well. Umesh Revankar is Executive Vice Chairman at Shriram Finance. He's joining us now. Mr. Revankar, morning and congratulations on a good set. Prashant here. We're going to just highlight for our viewers what we're going to talk about. Asset quality, we want to get some guidance from you. Growth, of course, numbers going forward, and margin expansion as well. Maybe we will see more of it up ahead. Mr. Revankar, it's like it's been an up and up kind of trajectory for you now for the last almost 2 years. So it's been a one-way street. This quarter, I think what kind of stands out is that overall credit costs for you have remained very much under control, 1.78 compared to about 1.73% last quarter. When we spoke with other companies, in your peer set, some unlisted names, etc. as well, most people highlighted some stress in the commercial vehicle segment. It's not showing up for you. And CVs, by the way, is about almost 50% of your business. So I just wanted to start there in terms of what what's driven these numbers, especially on the asset quality front, and how you managed to keep it very, very steady.
Yeah, thank you. Good morning, Prashant. See, as far as our business model is concerned, we have a direct touch and access to customer all the time. And most of the customers whom we lend are individual and small SRTOs. And that's one big difference between us and many of the others. And the second thing, the asset values of the vehicles have remained very strong. It has not changed at all. There is nowhere you will see idling of a vehicle, income getting reduced, or vehicle value coming down. So these three things are very important for viability in a CV business. And since we are in touch with the customer, we have direct access to customer, we did not see any stress as of now. Even the sales numbers, if you look at, the first half in the sales numbers have gone up. The CV demand has gone up, even though most of the demand would have come in the fag end of September. But even in October, the year-on-year sales numbers have gone up. That means there is a significant demand for a commercial vehicle. The activities in the ground is quite good. And therefore, I feel the business is good and the customers are able to repay on time.
So that's the CV side of things, which you say is humming along quite nicely. I mean, growth has come across the board for you, right? Even in some of the other segments, for instance, MSME. And I think on the back of this, you are guiding for almost 17% AUM growth this year. So give us some more color on what makes you so confident that growth can be, it's music to the ears and your investors are loving it. Stocks up 5%. So give us some more granular detail on what makes you so confident about this kind of loan growth.
See, typically the festive period or festive time is the indicator of the mood of the customers. And this time around, the October has been all-time high sales number for all the segments, whether it's a passenger vehicle, commercial vehicle, two-wheeler, and three-wheeler, tractor. Every segment has shown big growth. Only one sector that has not shown a big growth or maybe even a growth is the construction equipment, where there has been some slowdown in the infrastructure spending, which is likely to gather momentum post-rains. Normally, post-rains, these infrastructure activities continues till the arrival of rains. So this time, the monsoon has extended. Therefore, there has been little slowdown, but I think that also will join. The other point is most of the demand coming from the rural side. When I say rural, I include semi-urban also, because that is where the hinterland, rural is a hinterland for the semi-urban area. And together, that demand is quite good. So I believe the credit demand will continue to grow, with October being the peak sales or peak demand for the business.
All right. Hi, Mr. Revankar. First of all, congratulations on a very, very good showing. No worries with regard to the numbers. But sometimes the street seems to be looking ahead and sniffing something more. Now, unconfirmed reports indicate that Japan's Mitsubishi is eyeing a stake. My question to you is, can there probably be a fresh infusion to pick up 20% stake? Because that's what the unconfirmed reports are suggesting. And sometimes there's no smoke without fire, right? You want to deny totally, you want to say that could probably be something in the works. Please go ahead, sir.
See, we are in discussion with many of the banks and institutions all the time. And this time we have not even discussed this in the board. So there is no question of raising equity at any point of time.
You're definitely denying that there's no talk whatsoever with Japan's Mitsubishi to come in and take 20% stake via a fund infusion. Is that correct, sir?
First of all, we need to discuss this in the board meeting. And since it has not come to the board, I cannot further comment on that.
But sir, you are saying that you are in talks with institutions. I don't know, is that a general statement that usually you're in talks with a lot of institutions? Or are there talks ongoing right now, but it's not come to the board level? And eventually, I mean, then it could come to the board level, right?
See, generally, as you rightly said, banks and NBFCs do look for raising resources all the time. It is your raw material. And therefore, there will be multiple discussion. And unless it is becoming a very confirmed or concrete structure or a plan, then only it will come to the board.
Is there a concrete offer, Mr. Revankar, that you know of?
There's no concrete offer.
Okay, got that. So we'll
But that could probably something that we could hear in the coming month or two, right?
No comments.
Okay. I think let's just move on to the next one, Mr. Revankar, which is, of course, we've spoken about this earlier as well, a credit rating upgrade, right? What's happening there? I think we've asked you this before. When can we expect that? I mean, that perhaps a little bit more not in your control, but you have to work with rating agencies. But should we see that AAA anytime soon, sir?
We are definitely working on it. We are working with the credit rating agency. We would definitely like to improve our rating because rating upgrade and AAA gives us a lot of huge opportunity in raising resources at a lower cost, especially sovereign funds or provident funds and insurance companies' investment. Those things comes at a much cheaper rate. Therefore, we'll be working on it. Definitely, the rating agencies are very positive about it, and hopefully, we should be able to go through that or get it as early as possible.
And got that as soon as possible, and you sort of obviously effort towards that. This is not in any way related to a potential transaction, Mr. Revankar, is it? I mean, a rating upgrade and then maybe some kind of a partnership. Is there any connection at all?
There's no connection at all.
There's no connection. It's got it.
Final point on the fundraising bit, Mr. Revankar. I mean, just take us through the capital ratios as of now. I mean, purely from a capital perspective, are you fully covered for growth for, say, the next 1 to 2 years? Or could there be a discussion? Because, I mean, on the growth front, you're seeing very strong growth ahead. So is there need for growth capital, or do you have enough? And then then the capital raising conversations are more about building a buffer for the future.
See, statutory requirement is 15%. We are above 20 now. So we have enough buffer for the kind of growth which we are witnessing, around 16-17% growth. That is sufficient for more than 2 years. Okay. So I don't really need capital for the growth.
For that. Got that. So if anything, it might be, something more strategic, and you will tell us more when it comes to the board level. Take that point, sir. So I just want to now, get back to the business and margins, because that's another very heartening, point when we look at Q2, because while most lenders have had some compression here and there, you managed to grow margins by about 8 basis points. So just tell us how things are moving, both on the cost of funds side and on the yield side. And I think you're saying by the time the year ends, you will be higher. The exit margin will be higher versus where you are right now. So just give us some details.
Yeah, see, the cost of fund in our books today, as it stands, it's around 8.83. We have improved from 8.89, around 6 basis points we have improved. Incrementally, we are borrowing at around 8.3 if you look at the number in the last quarter. We would like to improve it further. So as we keep repricing the existing borrowing, because 87% of my borrowing in the books is fixed, 13% is floating. The floating one will keep changing depending upon how the banks transmit. But as far as the fixed is concerned, it depends upon how it gets repriced at the time of maturity. So as we reprice it over the next 2 quarters, the cost of borrowing will come down, and that will flow into net interest margin. However, at some part of it will definitely be passed on to the customer as a goodwill gesture, and also to expand our customer base. So that will be done at the appropriate time. However, we would like to keep growing our net interest margin to around 8.5 level by the end of the financial year.
Absolutely. Mr. Revankar, just one personal change, right? So we have the current CFO is going to take over. Mr. Parag Sharma is being promoted to MD and CEO with Mr. YC Chakrabarti, who's after his term is completed this year, right? I mean, later in December.
Yeah, it is later in December. See, we have a very strong senior team, and a succession plan is I should say, well planned much in advance. And we do have a lot of other senior teams which will come into board. We will also have 2 COO coming into the business centrally, because they were managing it in the various geographies. They'll be moving to Mumbai, and this business will be managed centrally. Because we felt that the central team need to be strengthened further to know what's happening in the ground level. We also have people we had 5 geographical unit earlier. We have made it 10 now. So there will be larger...
what about Mr. Chakrabarti, sir? Will he be with the group?
He'll be with the group. He is part of a senior team.
Okay.
So he'll be remaining with the group.
Okay, so 2 new chief operating officers, CFO being promoted, so internal long-serving members being promoted and elevated. Thank you very much, Mr. Revankar. Great speaking with you. Really appreciate it, and good luck as you continue to execute very, very well. So that's Shriram Finance. Stocks up about 4.5% as things stand right now.